Hey everyone, it is Evan here from the Trade Risk on Wednesday, April 8th. We are intraday right now, and this is our weekly swing trade ideas video where we bring you some of the names from our watch list, stocks that are holding up well and showing some relative strength. As always, these videos are powered by our partners over at Investors Business Daily. We're curating ideas from their stock lists. You can get access to their stock lists with a link in the description of this video. Now, we got 4 names we're looking at today, 2 from IBD's watch list and 2 from our watch list. So let's jump into it here with the first stock, ticker symbol DQ. And this comes from IBD's watch list. And if we zoom out here, you can see this has had a pretty strong run, of course, through last year. Starting out, of course, the market in general had a very strong run, but this was up about 200%, 220% from the start in January of 2019 to the peak just a couple of months ago. So needless to say, quite a large outperformer here. And if we go a little bit further in and look at the recent price structure here, what I like most about this pattern is the well-defined levels and price structure that we're seeing out of DQ, because again, as traders, especially if you're looking at charts here and you're trading off of traditional technical analysis, the one of the more important setups and criteria for you is to have well-defined price structure, to be able to define your risk, to know where you're wrong, and to know where you would exit out of a trade. And in DQ, I think we have that. So basically what I'm seeing here is we have the lows that were made a few weeks ago back when the market sort of bottomed here the last week of March. And with the surge that we saw here going into the final days of March, we started to then pull back. And what you're seeing potentially develop right now is this higher low above this $42 low that we saw just a few weeks ago. So for DQ here, the way I would sort of look at this, we have the potential higher low here. It still has to prove itself, but if we can start clearing above this recent pullback, this recent downtrend line, or if you're looking to be a little more conservative, over $59 to $60, this general area here, as it starts to make a new higher high, that could be an interesting entry point as well for some trend continuation to the upside. But DQ here, I think we got some nice price structure. It's a very fast, volatile moving stock, prior leader, decent sector, and something I think worth paying attention to. It's certainly a new name that I haven't looked across or seen before looking at IBD's watch list. So DQ, that's number 1. Number 2 here is Dropbox, and this one here, a very different view, because if we zoom out here in Dropbox, you can see that this has been, I guess the term would be a fairly unsuccessful IPO here, in the sense of, at least in terms of secondary share performance, but DBX here does look like it is trying to put in some type of bottom, perhaps a meaningful bottom here, with the behavior that we've seen over the course of the past few weeks. So similar to the market here, it did suffer a pullback throughout March, and in fact that pullback led to new all-time lows. But what we'll notice here is that it didn't last long, and these levels were ultimately rejected down here around $15. We shot back up to about 19, and this is at a sort of critical point now, because if we zoom out over the past multi-year history, you can see this $18.75 to $19, this has been an inflection point for Dropbox going back many months now, and you can see we're consolidating just under this level, and again trying to put in what could potentially be some type of higher low here. So for DBX, this is not a market leader. This has a lot to prove, but if you like the story here, if you know a bit about the company and perhaps how it's performing, if you're looking at an entry here on a longer term thesis, I think over $19 starts to look pretty interesting here from DBX, where we'll finally get some technicals firming up. Again, a little more to prove in the longer term to get more momentum behind this name, but I think you have at least the start of a potential bottoming formation here in this particular stock. So DBX, that's number 2. Number 3, if we go to our watch list here, is EverQuote. Again, this comes from the tech sector. If we zoom out here, you can see it has had a tremendous move since the lows in 2019. From low to high here, approximately a 1,000% return in about 14 months from low to high. It has since pulled back from that time, but needless to say, again, a very volatile high beta name to look at here. And if we zoom in, again, we have some nice well-defined price structure. So we got as low as $21, which again, just looking at volatility here, that was good for about a 55% pullback off of the highs in just about a month and a half worth of trading. So again, please, do your homework and be aware that some of these names are very aggressive, including the next one we're going to look at. But if we, draw perhaps a simple kind of trend line here, we can see the slope at which this was pulling back. We are now back above it. You could say that we did get more of a kind of a retest here, a more successful sort of convincing potential retest that these lows are in fact good. The only thing we were missing here is some maybe good volume coming in off of these lows, but still, I think you have a pretty good technical structure here, and at least something to pay attention to, even if it's not right today, something to keep your eyes on in this really strong prior market leader. So last but not least is CODX, and again, I'll throw the disclaimer out there to do your homework on this particular name. I'm not sure firsthand the catalysts that are driving this stock, but again, you can see just from the start of this year, this was effectively a penny stock. I don't like looking at penny stocks. I don't traditionally trade them. I've never traded them and don't traditionally chart them. But given the surge here, given the demand into kind of a real trading vehicle, perhaps, we're going to surface it here. And again, it is extremely speculative. It's a micro cap, nano cap stock at $160 million market cap. And again, the volatility behind this name is tremendous. But I think if you're looking for momentum, if you're looking for a very aggressive, strong performer here with some strong volume patterns of accumulation as this surged here, I think CODX is an interesting one to watch. It's in the medical space. You can see here it's been pulling off of highs. It's consolidating now off of the $18 highs, or I guess actually $21 highs that it made just a few weeks ago. So I think this one is just interesting. It looks like it needs a little more time here, but if we let this pull back, this consolidation form, perhaps this can lead to a continuation pattern, something to keep an eye on in CODX. So that is it. 4 names, a couple of aggressive ones this week. So again, do your homework, make sure the market environment fits your strategy, your time frame, your objectives, and make sure, of course, you do the homework on these individual stocks as a whole. So that's it for me. Thanks so much for tuning in every Wednesday. Trade ideas just like this. Have a great day, and we'll see you back here for the weekend market recap on Thursday.